Welcome back to the stock portfolio update videos. Currently, my two stock portfolios sit at a value of over $115,000. That's made up of the $61,576 in my state portfolio and then the $53,652 in my Vanguard portfolio. Today I'm going to be giving a little bit of an update as markets have absolutely ripped recently and my portfolio has gained over $5,000 since my last video on here. If we have a quick look at some of my holdings, you'll be able to see many of them have actually stayed the exact same. It's just been a really big rally in the market as many stock prices have really bounced back. If you look at some of my bigger holdings, such as Amazon stock in the last month is up 17%. My total equity is around $6,780 and I'm up around 4% now as I were buying in at a lower price. I did miss the boat on buying at the very bottom and really timing it as I didn't have as much cash available then, but I was buying it as it did dip down here, and I got the opportunity to buy a little bit more during this dip, but not as much as I wish. But I'm still now back in the green on Amazon, which is quite good because there was a period of time I was in the red on it. But I believed in this company long term. And if it does get back all the way back to its $240 a shares where it was trading, I'll be strong in the green with a much bigger position at nearly 33 shares. If we also look at some of my other holdings that's done quite well recently, we can mention Microsoft. Microsoft has had a great past month as well, up 22%. My total equity in Microsoft is also over $6,000, and keep in mind this is USD, so this is nearly 10,000 AUD, and I'm up around 44% now with an average price of $314 a share. So this is a company that had a really strong earnings, and it's just carried that momentum. Even in the last week, it's still up around 2.5%. Overall, if we take a broader, more macro look, and we look at the S&P 500, this is VOO. This is the biggest holding I have in this portfolio. And this tracks the S&P 500 over in America. And in the last week, it's up 2.56%, which is a great return for the S&P 500 in a 1 week span. Even in the last month, it's up 12.4%. So a really strong bounce back as the overall price is back up to $540 a share. ETF that I dollar cost average into. So my average share price is around $420 per share, and I'm up around 30% on it. Again, because I continue to dollar cost average over time, it brings my average price up more, but I don't mind because I think long term, it's the right idea for me to have hopefully around 50% of this portfolio invested in the S&P 500. If we mention my Vanguard portfolio as well, this is one where I've really been funneling a lot of money into, just because it is a bit cheaper when it comes to fees, and then I don't have that foreign exchange as well. So this has been a great portfolio for me recently as well. So my biggest holding by far is VGS. This is actually my biggest holding by a decent chunk across both portfolios now. So it's sitting at around $43,000. So this kind of just tracks a lot of the big companies globally. And it's trading at $138 a share at the moment. And I have around 311 shares. So if we have a bit more look into the product details, you can see its last year's return was around 14%. And if we kind of look at the description, you can see it's Vanguard's international ETF that returns ex-Australia, so around 1,500 companies, so it is very diversified, but it does have a very heavy weighting as well to America, which is kind of what I wanted. And if we have a look at the last 5 years, you can kind of see this upwards and to the right trajectory, pretty similar to VOO, and in the last year you can kind of see it as well. It's done quite well. I was trying to buy in more shares when I could here in the 130s, and hopefully it can get back up over that 140 mark again, which I strongly believe it can with my longer investment horizon. But yeah, like I said, this is similar to VOO. I just can't actually invest in VOO on my Vanguard account here. And this holds Microsoft, Apple, Amazon, all those big companies. So I do believe that this will be a good holding for me long term. Now, if we look at my other position, that's VLC. So VLC is an Australian large companies ETF, and it's trading around at $82 a share, and I have 126 shares. So if you have been following the channel, this is a position I've been slowly winding down in. So I used to have around $16,000. I sold probably around $6,000 almost now, $5,000 to $6,000, and I have reinvested that money back into VGS, as I just believe there's better growth opportunities there. I still have this position. And I'm thinking of using this money towards something like a house deposit, just supporting that. But it is doing all right for me. If we have a look at the kind of closer details, it has had a good year's return at 10.6, and it does pay a very strong dividend each quarter. So this invests in the 200 largest companies in Australia, which makes up around 70% of the market. Think of many of the big banks, oil companies, things like that, and that's where this is invested. If we have a look at the last year, it kind of shows you a little bit how things have been tracking. Again, I had this dip here, but I wasn't buying in. I was just kind of more holding. I did sell a tiny bit too, because I could invest it into VGS. I understand, obviously, you don't want to be selling at a bad price, but I think it can get back up there. A lot of the Australian banks are quite expensive, but I do plan on kind of liquidating out of this position a little bit, or worst case scenario, keeping it around $10,000. I can't see myself putting money into this at the moment, but I don't think it's a horrible investment either. But yeah, this portfolio has broken over $50,000, which was a goal of mine a few videos back, as the portfolio was sitting at around 48,000, I believe. So now it's over 53. And my goal with this portfolio is to kind of keep it a similar holding value as my stake one. So I am a little bit behind, but that's because I started my stake portfolio so much earlier. So I will continue to dollar cost average into this portfolio as well, and hopefully I can get it to 60,000, and then I can break 120,000, sorry, and in total portfolio value. But whilst we're on that topic, I did want to speak about overall portfolio value, and I will go to the Excel spreadsheet. So if you've seen any of my other videos, you would have seen this spreadsheet I have as well. Very basic. It does kind of break it down. It makes it a bit easier to see. So if I go here, you can kind of see the portfolio values over time. So if we just look at specifically January this year, you can see my stake portfolio was $56,300, and then you can see my Vanguard portfolio was $42,300. So just in this short time, this has really gained a lot. If you just take my Vanguard portfolio value, it's up over $11,000, and then my stake portfolio is up around $5,000. So whilst it has been not the best year potentially in markets, I've continued to dollar cost average, and hopefully I can reap the benefits of this towards the back end of the year. That was my goal. I didn't think the markets would have such a quick recovery. And again, I'm not an economist, so I don't plan on timing the market. I don't see myself as a trader either. My goal is to buy into positions that I believe in long term, and then invest whatever extra money I don't need at the moment into these portfolios. And these two little graphs here on the side just show the dollar amounts over time in this portfolio. And you can see it's been pretty steady and to the right. I update these at the end of every month, so the next one will obviously be right back up again. But yeah, if you have a look at these portfolios, this just shows you the power of dollar cost averaging in. Not trying to time the market or anything like that. Just consistently putting money in every single week, every fortnight, every month, whatever suits your pay cycle. And it's managed to grow my portfolio up to 115,000. I am still 22 years old, so I have a long investing horizon ahead of me. And my goal for the end of this year was to hit $150,000 invested. It's probably a bit ambitious. I don't know if I'll be able to hit that. That's what I said previously. I said I'd need the market to have a really strong year. I could probably hit it if I wasn't saving for other things as well, but that's my ambitious goal if things go really well. But realistically, even if my portfolio hit 130,000, 135,000, I'd be very happy, because we are nearly halfway through the year. But I planned on using this time when stocks were down to do what I did in 2022. So can't exactly see whereabouts it was, but there was a period here, would have been around here somewhere, where stocks had a really rough time. Like, even if I'll show back, go back and show on the stake portfolio, because that kind of shows it best. So if we have a look at my holdings and we go to VOO, just because this kind of shows kind of a better picture. So you can see here in 2022, it had a really rough year. So after the great year of 2021, COVID, things really hit the ground, and I used that time to heavily invest. Again, I wasn't making that much money back then. I was quite young, but I used all the extra funds I could to invest into my portfolio. And then I really reaped the benefits of it, because you look here, January 23, all the way up here to December 23. Great year. And then you look at 24, all the way up here till December 24. So the hard work that I put in here in 2022 when markets were down, there were times when my portfolio was down over 20%. I reaped the benefits of it. And then I also learned a lot of important lessons. It's easy to invest when things are kind of just up and to the right, but it is a bit harder when things are coming down, especially if you're a young investor who doesn't have as much experience. Again, I don't have that much experience now, but I am getting closer to 5 years of investing, which has taught me a lot. It taught me which stocks I believe in. It taught me which positions I can hold long term, because you really have to have strong belief in the positions that you're investing in to maintain it over long terms. Because even great companies like Apple's a great company, but if you bought it here and it had this dip here, it does get hard to justify keeping it. You don't know what else can happen in your personal life. That's why I always say, again, this isn't financial advice, but invest money that you don't need for the short term. And lots of people say this because if you know you're gonna need that money soon, it is harder and harder to keep it in there. Because if you were to have sold at this point, you would have missed this exact jump right up here. And then again, you experience the same volatility, but then it goes back up here. So if you would have sold here, you missed this one, and then it goes steady. And if you sold there, you then miss this jump, and it's fallen again. Potentially there's another rise to come in the future. But that's the things you can potentially miss out on if you don't have the money to sit there and you're not dollar cost averaging in long term. Other companies that I'm kind of looking at the moment was Google. So whilst Google has had a bit of a rally recently, which is almost sad for me, it's good I'm an investor, so obviously it helps my returns, but I wanted to invest more money. It's up 5.4% this week, 8% in the last month, but there was times here where the stock was trading so low, under $150 a share. If I could have been buying more there, that's the thing where you really want to have excess cash sitting on the side for times like this. Obviously it's still cheap in regards with the last 6 months, it's still down. But some people, I saw videos on people getting it in at under $150 a share. They've done really well for themselves, I think, long term. I am now up on Google. I'm basically flat 1%. And I have around $5,600 in equity, or 34 shares. So that's kind of how my Google position is looking. I would like to buy more of it. But yeah, maybe next week. I did put some money recently into my Vanguard account, and I did buy some more VGS. I bought 5 more shares. I didn't invest as much this fortnight as I am saving up other money. So that's why the deposit wasn't this big, but I've been carried a lot by the market gains. And I've noticed as my portfolio has gotten bigger, I rely a lot more on market movements than deposits now. Like if we go back and have a look at this, these graphs, you can see there were times here where I was heavily investing money like here, but my portfolio went down. And that's because it's now at the point where back here, if I invested money, even if there was market movements, as long as I was investing money into the portfolio, my deposits kind of basically confirm that the next month it would be higher than what it was prior. Now as the portfolios get larger, and again, I don't own a massive portfolio, like $1 million, $2 million portfolio, but as I've broken that $100,000 mark, I've noticed a lot more swings in regards with the value of my portfolio, and that I don't have as much control with my deposits. But that's all good. Yeah, that's bound to happen, but that also can help me in months like this or times like this where my portfolio jumps nearly $5,000-$6,000 in such a short span of time. So yeah, that's just kind of how things are looking. I also updated this so you can see how my two portfolios are kind of weighted. So you can see my Australian portfolio here on the right is around 80-20, with majority of the money, like I said, into my international shares ETF. And then in my American portfolio, the goal is to keep VOO around 50%. It's sitting around 46% currently, so I do need to buff that up a bit. But as kind of some stocks have rebounded, like Microsoft and then my growing positions in Amazon and Google, it's kind of forced it to be a bit smaller. But I do plan on investing some more into there when I can. But that's kind of how the portfolios are weighted at the moment. In regards to dividends, I haven't received or updated this because it's updated at the end of the month. I think I received a $1 dividend from Apple yesterday. But again, the only dividends I really look out for are my quarterly ones from Vanguard, as they are the ones that kind of push the needle. And then any money I get from my dividends, I reinvest back into the portfolio. Overall, this week was just another good week and a bit of a learning lesson again on what to do with your investments and kind of keeping a long-term horizon. My portfolio is back up 22% now. There was a time I think it was only up 8% after it really fell down. So that just shows you time in the market obviously beats timing the market, as everyone says. and hopefully next week we meet up again. Even if stocks go down, I'll do the same thing. I'll keep dollar cost averaging in as I kind of go on this journey to build these portfolios and do these videos showing it. So feel free to share how your portfolios are doing, and I'll do another video next week. Cheers.